Hey everyone, welcome back to another video. Now, I know a lot of you are here from watching my Trevor Milton videos and my comedy videos, but I actually started this channel because I wanted to teach people about investing and show my journey to financial independence. That's what I'm going to be showing in this video, a technique called selling options, which has been really profitable for me. And if you stick around to the end of this video, I'll actually show you how much money I've made. And I am not even an advanced trader. I'm just moderate intelligence and taking not so risky plays. Quite eye-opening. Real quick, what are options? Options are basically insurance. It's like car insurance. You have an investment, you could buy insurance on it. Maybe it gets totaled, but you could still sell your car or get the full value of your car back because you paid insurance for it. Now, instead of buying insurance, buying options, you could also sell insurance. So if you think about these big insurance companies, how are they so big? How are they making millions, billions of dollars every year? Actually, because they are selling insurance. So us as the people buying insurance, overall, it's worth it to us because we are giving away our risk. We're paying a premium to give away our risk. But ultimately, for the insurance company, they are collecting enough premiums that they ultimately still make money. And that's what this technique is. It's called selling a put, and we are essentially selling insurance. And that's why we can make consistent money, because we are taking the risk somebody else is afraid of. Ultimately, over time, we will still be profitable, but it's essentially win-win because somebody else that bought the insurance just wants the peace of mind that their investment won't go completely down the drain. So today I'm going to show you what you can do if you have some cash. And this is a fairly safe play, but of course, warning, no play is completely safe. There's always inherent risks. So please understand what you're doing, do more research. With that being said, let's dive into it. So let's say in your account, you're holding onto some cash, maybe $1,500. We'll look at this stock right here, Carnival Cruise Lines. So Carnival Cruise Lines is a big cruise line company, and obviously they are not doing very well. But if this were a company that you really believe in, let's say you love cruises or you think Carnival Cruise Lines will recover someday and it's something you wouldn't mind owning shares in, then you could sell a put. What happens when you sell a put? Somebody out there, the insurance or the put buyer, is scared that Carnival Cruise Lines will continue to go down. They want the option to sell their stock, 100 stocks, because one options contract contains 100 shares, at a certain price. And you could sell that right away. So if Carnival Cruise Lines were to hit that price where it's so low that they get nervous, they could still sell their shares to us. We are taking on their risk and we can buy it from them at a certain price. So let's look at the Carnival Cruise Line options, and we'll keep it really simple. Today is October 4th, so let's just say we sell something 1 week from today with an expiration date of October 9th. So what this is when the insurance or the options contract expires. By this date, if it has hit the strike price that you and the other buyer have agreed upon, that is when this contract will or will not executed, depending on if it's hit that price. So don't worry, I know it's a little confusing, but we'll do an example. So right now, Carnival Cruise Lines is at $15. And you can see this is the share price, and we have all of these options. We have strike prices that are increasing in value and also decreasing in value. Today, I want to teach you how to sell a put. So if we look back at this graph, we can roughly just try to look at what are its lowest points. It's hit as low as $13.56, $13.70. Right here, there's some resistance. We have to decide when we look at this, how low do we think this price is going to drop? And we'll use that to pick our strike price. So I think it probably won't drop lower than $13.73. So I'll go to these options and then I'll see this strike price. I think $13.50. There's good odds that it won't hit this. Now, what happens if by our expiry date that it is above $13.50? Remember, if I were to sell this strike price options, then I would immediately get paid $13. So it's 13 cents per share times 100, $13. But by October 9th, if the price of Carnival Cruise Lines is, let's say, $14, then this contract would expire worthless because this contract gave the buyer the right to sell at $13.50. The share price is currently at $14, so they actually don't need this contract. If they really wanted to sell, they could sell at market value and just sell everything for $14. So we make this full premium and no losses as long as the share price stays above $13.50. Now, let's say Carnival Cruise Lines tanks and it goes all the way down to $12. Now, the buyer of this contract has made money essentially because their contract is worth a lot more. Because even though the share price is worth $12 come October 9th, they bought the right to sell it at $13.50. Therefore, they would be making the difference between these two strike prices. They'd be making $150 minus the cost that they paid for the contract. Does that make sense? So essentially, we are selling the risk. They pay a premium to make sure that no matter what, even if Carnival Cruise Lines were to drop to zero, they could still sell 100 shares at $13.50. So on the buyer's end, they're assuming that there's a good chance this price could drop below $13.50. And us on the seller side believes that we don't think it will drop below $13.50. You can even see here, Robinhood helps you calculate the chance of profit. We have an 85% chance of winning. And $13 that's a Chipotle with extra meat and guacamole. So, that's a good deal. If I could get a Chipotle every week, that's great. Now, you have to accept when you're selling puts, when you're selling insurance, that there's a chance that the unexpected might happen, that it's going to get called. But that's why you have to choose a stock that you don't mind owning. And if you choose a stock that you don't mind owning, it really is a win-win situation, because if I end up owning Carnival Cruise Lines, but again, because I support it, that's okay. Even if I get it at a slight loss, I wanted to own this for the long term. In the meantime, I've made premiums, and that's all selling options is you make these premiums. And I only chose Carnival Cruise Lines because it's quite cheap. So one thing that you have to be aware of if you're selling puts is that you need to have enough money to buy the 100 shares if the contract gets called. In the off chance that price goes below $13.50, and then you have to buy 100 shares for $13.50. So that's why you need $1,350 cash on hand just in case. But at the same time, it's a little bit less than that because you made 13 cents per share. So you actually just need $13.37 total, because you'll get this premium. And you can see here, if we were to continue with this trade, we would write our limit price. The market moves, it fluctuates all day, so you can choose what's the minimum amount you want to sell it for. This is very easy. The range is 0.12 to 0.14. The average of that range is 0.13. So you can see Robinhood automatically calculates the total amount of credit or premium you will get, which is, again, this is how much you get per share. And a contract is always 100 shares, so you times it by 100, and that's $13. And that's it. This is a very small company, and I would not recommend you selling puts on this company per se, unless you really, really believe in Carnival Cruise Lines. But if we go to a stock like Tesla, now Tesla, if you're selling puts, you can see you can make a lot more money. So right now the share price is at $411. Let's say, I don't think it's going to drop below $360. Like, I just... looking at the graph, assuming you've done some analysis, $360 seems very unlikely. And if in the off chance it does drop below $360, I don't mind buying 100 shares for $36,000 because I believe in Tesla. So even if I have to buy a bunch of shares, it's okay. I'm ready for that outcome. For this, every week, I can make $141, and I would have a 92% chance of winning. And once you get to more expensive stocks like Amazon or Google, the premiums raise even more. But then there's a lot of other factors to consider, like implied volatility, delta, and theta. But today, I just want to stick to the basics and give you an idea of what's possible. Now, real quick, I'm also going to show you my trading journal. This is how much money you can make if you own more stocks. As you can see, you definitely lose, but overall, you win pretty consistently, because if you look at those win percentages, they're pretty high, and there are ways to manage your trades so that you can win even more. And since I started trading in August, I've actually made over $4,000, and results aren't typical. I have a lot of Tesla shares, I have a lot of cash, but as a percentage of my total portfolio, I'm on track to make 25% to 50% if I'm more aggressive on my total portfolio. So you can look at how much money or stocks you want to trade with and make 20 to 50% depending on your risk tolerance. And it's just been a good month. Volatility is high, premiums are high. At the same time, when there is a crash, when there's a big dip, I will probably take a pretty big hit. But as of right now, things are going pretty good. I'm playing safe strategies, but I just want to show you what's possible. I actually started this channel because I was having a great time learning about options, and I think more people could benefit from. But I want to know what you think, how you feel about these videos, or what direction you want this channel to go, because I've had a lot of success doing the previous videos, but I don't only just want to do takedown videos. I want to talk about general investing advice, maybe a little bit about politics and just other stuff, because I have interests in other stuff, but at the same time, I want to make sure you guys are getting what you want, and I don't want to alienate any of you. If you think this channel is just one thing, just let me know. I'm open to all ideas. This is Green Knight Trading, where Squires become knights. Thank you so much for watching. I appreciate you all, and I'll see you soon.